Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, June 16th, 2022. Definitely video time. I just got a post out to you guys, static post. I know those are preferable to a lot of you, especially on anything big that's timely. Okay, so the post I just got out, well, it's potentially timely. We'll see if it plays out. Like I said, we just hit T3, the third price target on QQQ. That was, let me color it up here. Remember, it's a target zone. You can come down and hit the trend line there, but again, I look at it this way, from where we are, 268.30 is the support level, give or take. Remember, a 268 point security. 1% is $26. So I'm sorry, 10% is $26. 1% is $2.60, almost $2.70. So we're well within a percent. The low of the day was 269.28, and so that's effectively a hit there. Now, again, it's a support area. That's the line that I had there, and then there's this trend line right below that could be tweaked a little bit up or down. And but either way, I've talked about this many times. If I think there's a decent chance for a bounce there, I'm not going to hold out for another 0.5% or 1/4%, even if we go down to that line. I was pretty clear, and I'm sorry if you don't like the fact that I say, well, there's a chance. I give odds, and how much we could go down there. It's all about the rubber band snapping. I use that analogy so far. This is the rubber band. It's stretched right now to get down here from the top. And if we go down to T4, or let's just say we don't know where the snapping point is, so consider the market a rubber band, big rubber band, and where does it snap and break? Well, if we come through here and this support doesn't hold, that's probably where we break. If these divergences that I showed you on the 60-minute chart don't play out, they get taken out, that's probably where we break, and it'll be that meltdown scenario. And the good thing is, Ken, I'm just giving you where, from my experience, how I think it'll happen. There's no guarantees of this, but it'll probably be over before most of you know it. So if you are buying longs or in a 401k and you didn't heed the warnings way up here or back here, and you're feeling the pain, and again, no guarantees. There's no guarantees to any of this stuff, but I could tell you with a pretty good degree of confidence, I think if we snap it and hit down to my fourth targets, which I am not favoring at this point in time, I give you my odds in that last post, then it would probably come in a very quick fashion. Then we snap, there'll be a lot of forced margin call selling, liquidation. You get one of those little mini crashes. It's another 12.5% below, and again, I just don't see us stair stepping down from there. We're either going to hold this levels, which I favor, that's why I reversed, and I'm going to go over all the little micro levels to watch that might firm that up. So that is it. There's almost a perfect tag, if you will, that 268, 30-ish level right there. And again, a lot has to do with what I see on the 60-minute charts. You guys know me and my divergences. It's not the be-all end-all in trading, but it's a big part of it. And this is a busy chart now, but let's just zoom in on the 60-minute chart. I think I even have another board. I'll give you a clean board here. We'll look at this one, and well, it's cleanish, fewer lines. And this is what I see. This is what I spy with my little eye right here. Is this nice positive divergence here? It's not very big, and it may not play out. We could just keep going down and down and down, and then you no longer have divergence if the indicators drop lower. And that's going to happen if the price doesn't hold. If we don't hold support here on the weekly, and we don't turn around and bounce soon, that'll probably be the most likely case. However, if it does play out, then the way I look at it, I'm going to jump back to that NQ chart because that's really the one I'm hyper focused. I see some really nice levels. This is the way I see it happening. This is the first. Right now, we don't have a buy signal. I always say there's two ways for me to look at it, or in trading, whoever you are, if you're to make an objective case to open a long position. And number one will be a breakout above resistance. For example, if you have a bullish chart pattern, a falling wedge, or any other type of a bullish chart pattern that has a well-defined trigger point or buy point, break above usually a trend line or a resistance level. That is an objective level if you break support. Or the other way is to buy a pullback to support. I'm sorry, when I should have said break resistance. On the upside, it's resistance. So what you don't see here on the 60-minute chart, this is that long-term resistance. And remember, I always put a higher weighting on longer-term charts. What I see on any support levels and trend lines on the daily chart take precedence over what I see on the shorter-term charts. And then the weekly chart, of course, is even more significant. So this is where I covered all shorts today and went now to a full long net long position. It's not all in. Here's my points where I plan to add. This will firm up the case, and I think has the potential to spark a very powerful short covering rally. And that would be a break over the levels I gave you before. I know they're small here in the video. I've got to try to get these bigger here. 11. We'll call it 11,290. It's 11,289 right there. So call that 11,290. And then this one right here. Each one in itself, that will probably do the trick. You see that, you're probably going to see, boom, big short covering rally. And again, I try to, tell you not only where I think things are going, but how I think they're going to go there. It's something that, it's hard enough for, to call where a stock or, bond or a commodity is going, but to call the nature of how it's going to get there and call those zigs and zags, it's a fool's errand, but call me a fool. I like to do it. And that's how I think it'll happen. So takeaway is I'm going to get the video out to you before the close. They're going to buy it. They're probably going to buy it up into the close today and ramp this up here. And then, well, you know what it pretty much said what I needed to say there. That's where I will add and have a pretty darn aggressive long position at that point in time. Me, it's the futures, because that way I don't have to. We're still Thursday night, thank goodness. Friday, they keep you guessing. Friday's a hard day for me as a futures trader, because they do shut down the end of day Friday and don't open back up till Sunday night. So, but during the week, you get that round the clock, virtually round the clock trading. They shut down for an hour each day, but the stock futures. But that's about it. So there it is, guys. And so at that point. And the takeaway here is this is a 60-minute chart, so these divergences might normally project low, but I'm looking right now, near term. If I get hold of some longs and this happens to play out, look, by the time I give you this video, we may have done that by the time I get the video out to you. But I'd be looking, I wouldn't be interested in really covering any of those positions unless I get stopped out, something reverses, we crap out. Move back down below these levels if they are gained. And again, the big levels to me are right there, about 11,290 and then 11,554 should seal the deal. And if that's the case, the rally that I think will ensue, the initial leg up, will be about 12%. Which swing trader or not, there's a lot of investors that are giddy if they can get 12% in 1 year. So this would happen. Has the potential to happen quick. So I don't want to oversell it and get you all excited. Use proper position sizing. Go with what you see and what you believe. There's a little downtrend line too that could spark something here, a little wedge. So let me get off this. Again, only potential. The downside or the bearish part is if we can't rally and we keep going down. Oh, I gave you in that last post too, that 60-minute chart. I had the measured target. Which is right here, the top of there's that little flag, and then we measured down here just slightly below. Again, close enough to me. We were a little shy of the measured target, but we're also at support on the weekly chart. And then just to take it home, and it cannot be a long video or I will not have time to upload it. And remember, I upload it and then YouTube has to render it on their servers. And this is what it looks like on the daily chart. You can see it's not the best defined support, but it is that support. Again, it's not my final target. This is. This is just a daily chart, but we're at that support. This coincides with T3 on the weekly, so there's that. Now let's just run through the big fangs real quick. Apple, I'm really in no man's land on the weekly between support and resistance, so hard to make a case there, but on the daily chart here, I do have a support level that it's at, or close enough to, at about 128 right there. It's, again, not a super well-defined support, so I definitely wouldn't put this a 10 on 1 to 10 on support levels, but in conjunction with everything else, oversold conditions, bullish divergences across the board on not just the indexes, but many of these market-leading stocks, still work to be done. Apple needs to reverse here and then confirm this divergence. But that's why I'm looking at, and where will it rally, or where could it rally to? Well, there's an uptrend line right there. And if it does that from where we're at right now, if you scooped Apple today, and again, huge asterisk on this one, assuming that I'm right, then you're looking at about just to get to the trend line there and backfill this gap. See that big old gap where my crosshairs are? If it was a quick rally, which I think would be, that'd be about 10% there. So, or we just crap out and keep going down. And again, both scenarios are quite likely. I just don't think we're going to flounder around. We've already done enough consolidating up to and around the Fed. I don't think we're going to chop around. I think it's going to be pretty much either up or down from here over the next week or so. We'll see. Apple, I'm just going to go through the big fangs and it paints a picture. Microsoft, I have had support here for a while at about 239 right there. Again, decent but not solid support. There's a better support there. So if we do have another jog down, guys, and it could be in a day or two, a trading session or two, not a day or two, 2 days will be Saturday. But I'll be talking about these even better support levels, especially if we hit T4. I told you T4 is my all-in moment. It's just a matter, are we going to rally first before we get down there or not? I think we'll get there. It's just a matter of when, more so than if to me. Amazon top still where it was a few weeks back when I bought it first, flipped it up on that initial run, got out at T2 and went down, and we're back there again. So Amazon, and like I said yesterday, I still like this one's still holding support, and that's how these charts work too. You notice that, like those that had more constructive charts. I didn't highlight Apple as a buy a month ago when I highlighted Amazon and Zoom and the others, and they held up. They had the most bullish charts. They're up off those lows, and they're hanging in there. The other ones I left alone, and I figured there'd be more down, could be some more downside on the market because they had more downside to go. AAPL, type Apple. And so you see Apple did undercut the previous low, make a marginal new low. The chart was not constructive at that time. We did not have positive divergence when we had that last low. Now we do. So that's kind of the takeaway here. Got to go back to QQQ real quick. Look at the rest of them. I just did Amazon for you. There's Alphabet. Same thing. Pretty decent support right here. See that trading range from back in early 2021? Take the top of that range across. That's why I had a line here at 2028. And what this one did, it made a very brief overshoot but recovered it and then had a rally, and we're back to it now. So support. And this is a common theme, support. The more of these fangs, I like to use my my legal analogy. It's like a defendant in court. You get convicted of a crime, and the whole thing is, well, that's the whole innocent until proven guilty. But the thing is, the prosecution has to bring, has the burden of proof and has to prove a defendant reasonable beyond a shadow of a doubt now. And the way that works is the more evidence you build a case, and that's what I'm trying to do here is build a case. Because if I can't look at these charts, the components, and if I can't rip the market open like a surgeon, which I'm doing here, and looking inside, and all I have to do is look at these top FANG stocks, and if I can't make a case that the majority of these stocks are at a support level where people might buy them, then why would I want to buy the NASDAQ 100? Because that's simply a function of these top stocks. They are the result. The returns of the index. Look at that big divergence on Meta right there. I wish it was at a better support level or any support. It's not, but big positive divergence. And again, I always say this. You don't have to have divergence to cause a trend change, to cause a rally or a top, nor do you have to have a stock at support. What will happen is if 4 out of the 6, fangs, I call them now, there's no more fangs. The whole fang thing's gone now. There's no more Facebook's no longer Facebook, it's Meta. So that takes the F out of it. It's not even as big. Tesla's bigger, so that whole thing is, they'll probably call them fangs for a while. I'll still refer to them that way. I'm just referring collectively to the market leaders. But again, my point is, if the majority of them are at support, even though Meta just popped support, well, it looks like Google a few weeks back, Alphabet, which I just showed you, briefly broke support, but at the same time, Amazon and everything else that I pointed out was hitting support then, so you had a little bear trap or whipsaw, false breakdown, right? And so that will probably be what this is on Meta. And Meta has a pretty dang powerful chart right now. It's zero. Absolutely. Let me repeat that. There are zero buy signals. I don't see anything bearish, bullish reversals in the candlesticks. I don't see any volume climax, selling climax. So this isn't a screaming all in, put all your 401k money back into the market kind of moment at all. And tomorrow I may be singing a different tune if these charts, we just kind of peter out, the divergences break, all these support levels break. And if that's the case, then we're going to go down to the next targets, which I laid out. It's about 13% or so down on QQQ, and then comparable levels on all these things. So that's it. NVIDIA was one that Again, weeks ago, from when it was way back here, called it down to this level, my first target, which was 127, 157.27. Hit that level, one traded on it 1, 2, 3 weeks, and we're back to it again. So, like Amazon, this is one of the ones that I highlighted the better looking opportunities because it was a really nice support level. Bigger picture is ugly, guys. I'm going to give you both sides. I told you, highlighted recently, we got a big old bear flag here on the weekly, and we just broke down from it. So this meshes with that whole the markets just break down here, the divergences don't pan out, and the rubber band snaps. And if it snaps, then we're looking at a very swift drop on Nvidia. My next target's another 20, almost 26% below where we're at now. So does that happen now? It's possible. And so the takeaway is manage your risk appropriate. Use stops. Use position sizes that are commensurate with your level. I like to stack and layer in as my confidence gets, increases. And again, goes back to this chart right here, the 60-minute chart of NQ. Where does my confidence go up? Goes up here. And when my confidence goes up, my position size goes up. And it's going to go up even more there. At that point, if you don't have my fill of NQ at that point, I'll probably have it there. And maybe if I have powder, more dry powder to deploy, there's a big old gap and a major reaction high, the post-Fed reaction high right there. So, and that's still plenty of upside left. So that's it. Don't want to beat a dead horse. Want to get the video out to you quick. But out of my own curiosity, I'm just going to rifle through these sectors for you real quick. XLK kind of hanging in there on the daily, cracking support a little bit, not looking so hot, but not bad, not too bad because it's still close enough to support. XLV, like I already mentioned recently, and this is a big sector in the S&P 500. It broke down the other day, so this is how you can trade a bear market when it gets to the point where the indexes get choppy and a little obscure, and you can hear it in my voice when my confidence and my position size is not as high or I'm sitting aside. Then the great way to trade a market like this, because for the last few years it was an automated lift in everything. When the Fed flooded the system with money and DC flooded the economy with stimulus as well. We had all ships were lifting that rising tide. All sectors were going up. There wasn't a damn thing to short out there. I mean, other than volatility, metaphorically speaking. But what I'm getting at now is we've returned to sector rotation, and I'll continue to highlight sectors and commodities that I think have the best bang for their buck. And so there was one example. That one broke down the other day. It's not at support. I wouldn't, I don't care to short it now because the reasons I just said. But again, one of the weaker looking sectors. Now, if it rallies back, XLV to back test that. This is a very diversified ETF. So unlike others, when you go with like SOX or the semis, they're all birds of those feathers flock together. And XLV Healthcare, that there's a huge disparity or diversification among different healthcare companies. It could be small, tiny little biotech, major pharmaceutical, integrated, pharmaceutical with their own, drug development, biotech programs. You have hospitals, a lot of different things in there. So something like this, I prefer to go through and find the most bullish and bearish charts versus the ETF, because he's kind of like trading SPY, the S&P 500. It's so diluted. Even if you're bullish and you get the call right, and you got utilities dragging you down on the upside, even though the tech stocks are rallying, or in a correction, vice versa, tech's going to drop. But then you've got healthcare and utilities and defensive issues like that, consumer staples holding you up. So that's kind of it goes back to knowing your sector and more so your ETF. What is that ETF? How's it made up? Anyway, that's about it. XLF Financials, just hit T3 the other day, and they're below it. So this is a little bit of a right here. Was T3 was hit, but then that gives me a little bit of pause, and that's why I am certainly not all in right now, because this is a big sector, and that was a pretty decent support level there, 31.35. We hit it a few days ago. We consolidated. There's that reaction I always talk about. And that one came in the form of a consolidation, but then we broke it. So that's not good. That doesn't help my case to go long. There was divergence forming there, or is. XLC, communication sector. again, this is really just two stocks, Facebook and Alphabet. I already covered those. So again, know your ETF. I haven't updated this in a while, but last time I did it, again, it was a while ago, and Facebook got clocked since then. But back then, Facebook was 21% of this ETF, and the both shares of Alphabet alone or together were about 23. So that made up, just two companies made up 44% of this ETF. And if you don't know that and you buy the communication sector ETF because you think you're diversified with AT&T and T-Mobile and Netflix, well, guess what? You weren't. You were pretty much buying those two stocks I just told you about because they contributed to half the returns. So I'm going to wrap it up here, get the video out to you before the close here, and we'll take it from there. We'll know well, I don't know if we'll know today. Today they could keep us guessing. So I'll do a follow-up after the close if anything big changes. How about that? Otherwise, we'll pick it up tomorrow. As of now, still, bullish treasuries, bearish energy, cautiously bullish the stock market at this point in time would be my best way to say it, but also ready. If I see that breakdown occur, I see us just smash through resistance, something happens to futures, first thing will happen tonight, I'll be stopped out. I probably won't do an immediate stop and reverse. If it's during waking hours, I'll check to see if it's worth me jumping in for a short. Otherwise, I'm gonna, as of now, as of 3:36 as I finish this video, I am long and plan to be long, but again, you know what I'm looking for, and I'm also not very long, just ready to continue to add into those longs. But again, the risk reward right now for remaining short to me wasn't worth it, especially in ETF instruments and things like that could gap down tomorrow if we have a big gap up. Treasuries are rocking too. I highlighted that as a trade I did yesterday, and nice lift today in ZB and TLT, and then I gave you, if you USB, if you wanted to UBT, it was the 2-time Treasury, and you're up decent rally. It's nothing huge, but almost 1% on that today, and so far they're buying treasuries. And again, bullish divergence. It's kind of odd. You've got the bullish divergences on the index and treasuries, but this is the Fed has destroyed. I talked about bonds in particular years ago. I kept in the last year or so, I should say, several times I talked about complete destruction of the age-old thing in the financial markets known as price discovery. And price discovery is just defined as the natural process between buyers and sellers that interacting that determine what something is worth. So Bitcoin, everyone might have think it was crazy, insane, overvalued, and I did, but it was what it was worth at the time when it was trading, and whatever its highs were, because that's what everyone was willing to pay for it. But with the Fed intervening and into the bond markets, direct intervention, it kind of just turned everything upside down. And so now, try to do my best to figure out fundamentally and technically where bonds are going. But when the technicals are clear, that's when I'll jump in. So still looks good, work to be done. That's still, my target right there. And, if we gapped up tomorrow or sometime soon, we could have an island cluster bottom there. And then again, you pop that and you can head up to my next target there at UPT. All right, let me wrap it up here. I will do crypto. Somebody asked me in the comment section about crypto and Bitcoin and Ethereum, as well as an updated chart on gold. I will get that out as soon as I can. I got to scramble here, make sure everything's set before the close, and try to get the video out to you guys. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.